Well, guys, AMD just reported and they beat on both earnings and revenue. Earnings were supposed to be 40 cents. They reported 48 cents per share. Revenue of 7.42 billion estimated. They reported 7.69, beating by 3.5%. Let's see how the stock is doing after hours in our software. Pulling it up right here. It's up 1.5%, a modest 1.5%. Not bad. AMD is an incredible business. They were in the doldrums. I mean, they were at low single digits share price in the 10, 12 years ago. This company's always been nipping at the heels of Intel and other companies. They make a great chip. They're loved by a lot of people. They're finally starting to make some big money here. Last year, they generated $2.75 billion in free cash flow. But guys, their market cap's $283 billion. They're selling for 103 times free cash flow. Now, we have to acknowledge that just because something's selling for a high multiple of cash flow doesn't make it a bad deal. With that said, a $300 billion company selling for 100 times its cash flow, yes, it can grow its cash flow very quickly. But what would have to grow the cash flow to justify it? That's the question we're here to ask. Let's break down their earnings release here. Well, let's also look at another thing. Our community members have AMD as a sell right now. 15% a strong sell, 15% as a sell, over half as a hold. And then actually 15% as a buy as well. So something to consider look at here. Second quarter revenue record of 7.7 billion, gross margin of 40%. That's solid for a chip maker. That's great. Net income 872, non-GAAP basis 48 cents per share, gross margin of 43%. I believe Lisa Su is Jensen Huang's cousin? Is that what it is? It's his cousin. The NVIDIA CEO and the AMD CEO are cousins. Look at this, 32% year-over-year growth in revenue. 32%. Gross profit up 7%. Gross margin down significantly. I'm actually surprised by this. 49% down to 40%. Increased competition, maybe selling other products for a lot cheaper. Operating expenses up 23%. Operating income, oh boy, they dropped their operating income big time. Net income up 229%. God, I love that. Great job. That's the GAAP quarterly filings, non-GAAP. Just huge stuff, guys. This company crushed it. Data center segment revenue up 14% year over year, driven by demand for their AMD EP, whatever that is. Client and gaming segment revenue 3.6%, up 69% year over year. Guys, they're crushing it. But I want to remind everybody that the question becomes, is $283 billion, is 100 times free cash flow, is 130 times PE a reasonable price to pay for AMD? The fifth tenet of our principle-driven investing is a great story can become a bad investment if you pay the wrong price. We can love a company. We can love the story. We can love everything about it. But at some point, you got to draw the line and say, this is too much money. Applied to everything in the world that you love, whether it's a material good or an experience. You can have an experience that's absolutely life-changing. Let's say one of the things I want to do in life is go to Antarctica. Would I go there for $10? Absolutely. Would I go there for $10 billion? F no. That's my point. Some point along the way, there's a price that's too high. AMD. Would you pay $2 billion to the company? Of course you would. They generate $2 billion a year in cash flow. Would you pay $20 trillion? I think we can all agree no. So somewhere in the middle, the price makes sense. But a lot of people look at the ticker and say, this is what the price of the company is. It's not. It's a piece of a share, but you have to look at the value behind it. Let's look at the 8 pillars here. What's the story the 8 pillars are telling us? Okay. Low debt, increased cash flow, increased revenue growth, increased net income. One metric I don't like here. They've increased their shares outstanding by 32%. If you're new to our channel, we call this a silent killer in investing. It's where companies issue shares. What that means is they're making other people partners of yours without giving you more shares. So as an example, let's say a company has 10 shares outstanding and you own one. You own 10% of the business. If they increase their shares by 32%, there are now 13 shares. You still own one. Now you own, what is that? 7.5%, 8% of the business versus 10% before. You still have the same share that you owned before, but you own less of the business, you own less of the revenue, less of the cash flow. I don't like this. Let's go see if this is continuing on. We can go to the financial statement, income statements, quarterly, all the way to the bottom. All right, it seems to have leveled off. They're at 1.62 billion very consistently the last several quarters. So they might be done with that. Because remember, there are two ways to fund a business: borrowing the money, debt, or taking on investors, equity. If they're funding their business, if they no longer need funding because they're generating cash flow, they don't need to take on debt or equity, which is a good thing. But these are the things to consider with companies as you've watched them. Let's see what the analysts think about AMD. Oh, wow. Big growth here. $4 a share this year, going to $11, almost 3x in the next 4 years. That's a lot of growth. That's a lot of growth. Premium. Revenue growth, 23%, 17%, 17%, 18%, 9%. A lot of growth there. So there's a lot of good things about AMD. And guys, a lot of companies in the S&P are great businesses. They're really good businesses. The question is, can you find the right price where it's better for you to buy the company than to put it into a low-cost ETF? That's the question. So we have this story, and it's a great story. We have this company, and we have to match the numbers with the company, right? So that's what we're doing here on our stock analyzer tool. That's what we're trying to get to next, which is to say, okay, what is the right price to pay? Before we go a little bit further there, I just want to break down a few more things in their quarterly report. Tell me this is not impressive. AMD now powers 172 supercomputers on the latest top 500 computers. That is 38.6% or something like that. That is a lot. That is a lot. Guys, there's no doubt AMD makes a great chip. No doubt. I mean, any person will tell you that. They're great, great companies. Now, here's their outlook for the future. For the third quarter of 2025, AMD expects revenue to be approximately $8.7 billion plus or minus $300 million. At the midpoint of that range, this represents year-over-year growth of 28%. 28%. They expect non-GAAP gross margin to be 54%. Wowza. That is big money. Big, big money for AMD. AMD is rich. AMD is rich. That's incredible. And they're trying to sell chips to China, currently under review by the US government. I wonder what Trumpy's going to do with that one. So usually when I say AMD, I follow it with AMD's nuts. Crickets? Are we doing a cricket sound there? So, guys, what's the price to pay for AMD that makes it worth it? Well, story, numbers, put them together in our stock analyzer tool. There's a reason why this thing is used over 1 million times per year by our users. I did revenue growth of 8, 12, and 16% a year for the next 10 years. That's a lot. But as you saw, their revenue was going to grow. They're expecting 28% over the last year. Is that can continue on? I don't know. This could be low. Very well could be low. I'm just apprehensive about going absolutely crazy on this one. Profit margin, 8, 15, and 22. Keep in mind, 15 and 22, they don't have record of that in their last 10 years. So I'm giving them quite a bit of extra numbers there. PE, I put 18, 21, and 24. Now remember, this is the PE and price of free cash flow for 10 years from now. Not for today, not for 5 years from now, as it matures. And finally, my no margin of safety, market intrinsic value return of 9%. Remember, if you want to buy an individual company, if you want to take money away from putting it into more low-cost ETFs, you should get a higher return than 9%. But the question is, what's the right return? I don't know. I'm trying to figure out what's this company worth based on my assumptions. I hit the analyze button. Now, guys, we got a lot of tools in the software. We got a great community. I always tell people, if you're interested in learning, getting better, no matter where you are on the spectrum of investing, whether you're a beginner or more advanced or somewhere in between, this is a great community for that. I use this software every day. Everybody in our company uses this software every day. We have so many great tools. We have a great community. We have a place for people to be themselves and to realize the certain tenets of our principle-driven investing approach, but apply it to stocks. So if you're interested in being part of that community, click the link below. We have a great 7-day trial. It's absolutely a game changer for you, and you're going to see why after 7 days, 83% of people take us up and sign up for the year after their 7-day trial. So I hit the analyze button. The stock's currently at 168. It is now down 3.5%. We went from up 2% to down 3.5% after hours. I have a low price of 34, high price of 215, middle price of 100. So I'm looking at saying, guys, I'm probably for myself going to be a little more apprehensive, but wait a second. I've said I might be conservative here. Let's take the revenue growth to 8, 16, and 24. Didn't change the numbers by a whole lot. 34 on the low side, 400 on the high side, 130 in the middle. It just goes to show that this tool is very useful to see how much minor changes affect the value of the company. Thank you for your time. I'll see you in the community.